So we are officially just one day away from the main event that everyone is going to be watching, which is the FOMC interest rate decision. And I wanted to quickly just provide an updated prediction on what we're likely to see for tomorrow, as I believe that there is a chance that we may end up getting a bit of a rug pull. Now, I want to go ahead and provide the reasoning why, but real quick, just looking at the S&P 500, we did in fact hit new all-time highs, but then we quickly retracted back and pretty much ended up the day pretty flat when you're looking at things from a day-over-day perspective. For example, we closed at around 562 yesterday, we gapped up, and then ultimately just retracted back down, and if we actually look, we kind of just closed slightly higher than the day prior. Now, what is it that the markets are expecting? Well, this is a pretty interesting one because for one, it's one of the most uncertain FOMC meetings on record dating back to 2015. There's a lot of uncertainty on whether or not we get the 25 basis cut or whether we get a 50 basis cut. And I wanted to go ahead and provide why I think we may end up getting a 50 basis point cut and how we could kind of get a bit of a rug pull from the Fed even if they do a 50 basis point cut. And so here's what I wanted to go ahead and mention. Now, real quick, this is currently marked as the longest the Federal Reserve has held rates at its peak before cutting, right? I mean, you look at all the different years, pretty much 99 was a long period as well. But ultimately, where we currently are in this rate cycle is the longest that we've held rates at a high level, right? And a lot of individuals and market participants are not used to this, as it's been a long time since we had rates elevated for this long. Now, real quick, I wanted to go ahead and touch on something that I mentioned in yesterday's briefing for those within the Push and Profit private group, and we talked about the U.S. retail sales for August. I'll go ahead and toggle over to the chart. I think it's a bit easier than just seeing the numbers over here, but ultimately, we saw retail sales fall down, which is what I expected. I mentioned how retail sales was a bit of an anomaly last month, and that was going to retract downwards, and if we actually take a look at it, what did we see from retail sales? Well, we actually saw a lot of different sectors or segments of the retail sales components actually fall down. So consumers are not as confident with their spending in a lot of areas, except for the non-stores and e-commerce, etc. But we pretty much saw everything else fall down, and that's kind of an indication that spending power by the consumer is weakening. And this was the last data point that we were getting before we had the FOMC meeting, and that's why I marked it as something that was pretty important to watch. Now, currently speaking, we are seeing that the future markets are pricing in a 63% chance that we do in fact get a 50 basis point cut. And that's precisely what I think is likely to happen. I mentioned how I said that the Federal Reserve should definitely be doing a 50 basis point cut, but in the past I mentioned that they'll probably do a 25 basis point cut. But now that we have a lot more data that's recently came out, I believe that they're likely to do a 50 basis point cut, but they may end up rug pulling us by kind of pulling a ECB. And what do I mean by that? Well, we had the European Central Bank, which they already have started some of their rate cuts in a few of the prior months. And recently, they mentioned how although they are cutting rates, they don't necessarily believe that they're going to be cutting rates again in October. And they believe that they may end up waiting until December, right? And so they're kind of slowing down. And we have this quote here: "We will almost surely need to wait until December for a clearer picture before making our next moves." And so what we may end up getting from the Federal Reserve, which is the central bank in America, is that we may end up getting that 50 basis point cut to kind of catch up with some of the other central banks, but then have Jerome Powell mention, or even in a dot plot, because we are getting a summary of economic projections, mention how they are, again, going to stay data dependent and not rush too quickly to cut, because there's still that fear that they have with inflation, right? Of course, I mentioned that inflation has been dead. It's fallen like a rock, and we've seen that. But they want to just be very cautious because they don't want inflation to resurface, because then that would be horrible, right? That would be extremely bad. Now, the reason why I say we're kind of in a catch-up mode is because when we look at, the central bank from Europe, right, they've already cut a few basis points already. When we look at Canada, who was the first one to actually start the hiking cycle and the first one to start cutting, right? They cut back in May 31st. they're already down about 50 basis points, right? And so for us in America, the central bank, the Federal Reserve, we have yet to cut. And so I think that what we're likely to see is kind of this game of catch up where we get that 50 basis points cut, which is currently what the future markets are also, projecting. But, and that's bullish, that's good for markets. But what we may end up seeing is kind of this kind of verbiage from Jerome Powell that they may want to slow down on how aggressive they want to cut, and they may just have to wait until the meeting after the next one, meaning they're going to be skipping. And so that leaves a lot of uncertainty for the market, because if we look at the S&P 500, yeah, we did hit new all-time highs. A 50 basis point cut is bullish, but if we ultimately hear that the Federal Reserve is going to be signaling a possible pause or a skip in the next meeting, and we also don't have earnings seasons coming for just a few, quite a bit, we're kind of left in this area of uncertainty. And so that's why I ultimately believe that we may end up getting somewhat of rug pull, where we're going to have a lot of financial institutions, the hedge funds, the traders, kind of just take profits, which is not a bad thing, right? For me, what I'm doing in my long-term portfolio is nothing, right? I'm not doing anything fancy. I'm not adding any more. I'm not selling anything. And in my trading account, right, because trading and investing, I always say is two different, objectives in participating within the markets. In my trading account, I'm also kind of not doing anything. Now, if I were to take a trade for tomorrow, I'll probably, wouldn't take like a scalp trade right after we get the decision on what we end up cutting by, which I believe is 50 basis points, but then close that position before we actually hear the press conference from Jerome Powell. So kind of that 30-minute window, and that's only if I were to trade. I'm likely not going to be trading or doing any like intraday trading for tomorrow, simply because I think that there's going to be a big swing up and then a big swing down due to the possible verbiage and this kind of rug pull of them kind of saying, wait a minute, hold on, we're cutting, but we're still going to be cautious. So that's pretty much just my opinion and my thoughts on what we're going to be getting for tomorrow. But you guys let me know in the comment section down below, what are your thoughts before the FOMC meeting decision? Are we getting that 50 basis points or that 25 basis points? And do you think that we're going to continue cutting rates until the end of the year? Or do you think we're going to be skipping a meeting? But also just wanted to provide a friendly reminder that we have a huge sale to join the Push and Profit private group. Simply type in FOMC and you'll go ahead and get to have access to join for just $6 this month. Again, you could cancel at any time. So definitely a huge coupon. And with that said, I'll see you guys on this next video right over here. Take care, guys.